Hey, it's Ryan from the Option Income Advisor, and today I want to talk to you about how to screen for good dividend stocks that you can use in the triple income or the wheel strategy. So I don't want to cover the strategy too much in this video, but we'll give you a 30-second overview, and I do have other videos that go into much more detail about the strategy itself. But it's pretty simple, right? We find good stocks. We write puts on those stocks down below the current price of the stock. We then allow it to either get assigned or expire. And if it expires, it goes back to step one. You sell more calls. If it gets assigned, it kind of goes through this cycle where then you write covered calls on the stock. And eventually, you repeat that cycle until eventually that stock gets called away from you. You sell the stock, and that cash gets put back into the cash secured put bucket, if you will. And so that's why some people call it the wheel, because it's kind of like a circular motion for your cash, right? And so two things I want to get across today is that, one, you always have to screen for the stock before you look for the option. So, I've always said this, over the years, where I think, especially when you get into this strategy, sometimes you just want to go out and find the best option, right? That has the highest yielding, premium, and you can get into trouble that way, right? If you're not willing to buy the stock, not that you want to buy the stock, but you have to be willing to buy the stock. And if you're going to be willing to buy the stock, you want to make sure it's a stock that you've screened for and done some research around and maybe want to own it, right? So you always find the stock before the option. I can't reiterate that enough. But the other thing is that this strategy works really well with dividend stocks. And actually, I coined the term triple income years ago because, with this strategy, you get put income, call income, and dividend income, right? If you're using a dividend stock, the other part of that dividend income could be a capital gain if you end up selling the stock. So, there was always three legs to the income stool, and utilizing dividend stocks makes a ton of sense for this strategy because, in general, it is a low volatility, high income strategy. So it really resonates well with dividend investors. Just because it kind of fits the mindset and the profile of what they're looking for, right? And so, again, find the stock, then the option, and it works really well for dividend stocks, right? So let me show you, what I want to show you today is how I screen for dividend stocks for this strategy. There's certain metrics I look for. There's certain things that I'll mention, and I think it's helpful just for you to hear why I choose different things for the screener and why they make sense and why they're important to me. And then, we can kind of go from there, and I'll show you, the output of what it will currently produce right now. And so, the goal always is to have screeners and watch lists set up so that as your cash cycles back around, you've always got opportunities to invest in, right? And so if you've got a list of stocks that you've screened for, you like the filters, and then you've got you got a nice watch list of stocks there, that because you're always not going to be able to find an option that works for every stock. But I will say, Kramer likes to say there's a bull market. There's always a bull market out there. Well, I like to say there's always option income out there, and I'll help you find it, right? And so it's not every stock, but if you have a big enough watch list of stocks, you can always find, I think, good, solid risk reward income to use in this strategy. So let me kick it over to our screener here, and so a screen I just created, I call it the best dividend stocks for triple income. And so what I want to do is I just want to bring up the filters, and then I'm going to walk you through each of my filters so you can get a sense for kind of what I'm looking for. And it's very simple stuff, right? So the first thing, I always screen for market cap and price. And so when I look at a price of a stock, I don't like to write options on stocks under $20. And then from a portfolio perspective, I mean, a lot of stocks these days trade well over, $200-$300. And so, I'll put you can see here, I put a maximum filter of 250. I don't like to put more than 5% of my portfolio in any one opportunity. If you're truly cash securing it, that means in order to do a $250 stock, which it's 100 shares for one contract, it's $25,000. So that would be 5,000, or that would be 5% of a $500,000 portfolio, right? So, I always like to set that upper limit there just so it doesn't bring up stocks that are going to be too expensive. And then I've got a minimum market cap of 10 billion. So basically what I'm looking for is large cap stocks, right? We're looking for blue chip stocks here. This one down here, I like to look at, we like to sell puts into weakness. And so, this is the percent below the 52-week high that the stock is currently trading at. And so I've got an upper and lower bound here. I want it to have at least traded down a little bit. So I don't want it hitting, I don't want it to be a stock that's hitting new highs right now, because that's not necessarily a stock I would sell a put on always. There's certain circumstances, but I would have to be comfortable with the general market. And right now I think it's a little frothy. So I want to see stocks that have pulled back a little bit, but then I also don't want stocks that have just completely plummeted. So I set that lower bound of, down 30%. So if it's down more than 30%, I kick that off my list as well. And then moving over here to dividend information, and you can see there's all this good stuff in here, but I'll show you, I've got some kind of proprietary rankings, I guess, that we have, but I'll kind of walk you through them. They're not, they're not rocket science. There's some pretty simple things behind it. But so dividend yield, I set it at a minimum of 2 and then a maximum of 6. So kind of similar, what I was saying about, I don't want necessarily stocks that haven't pulled back. I don't want stocks that have such a high dividend yield that, it's going to affect the liquidity of the option and things like that. Because most high dividend yield stocks don't make good option candidates. So there's really a sweet spot there. And I think 2 to 4 is probably the sweet spot. But just from my screen standpoint, I've got 2 to 6 in there. And then I've got a maximum payout ratio of 65%. So I want a payout ratio below 65%. And then now looking at these rankings, so our dividend ranking, and actually all of our rankings are, they're essentially percentile rankings. So it's from 1 to 10, 10 being the highest, 1 being the lowest. And we basically just rank all of our stocks in our universe against each other, and then we put them into deciles, right? So the stocks that rank as a 1 are in the bottom decile of all the stocks out there. And so what I do and the reason why I created the rankings this way is because it just makes it easy to just kind of, cut at least, half or so of the of the stocks that don't meet that metric out. And so for dividend rating, you can see I've got a minimum of 5. So 5 means it's going to be either 5 through 10. So we're cutting out 1 through 4, right? So we basically cut out the lowest 40% of stocks that rank according to this dividend ranking. And so the dividend rating, it includes all of this stuff right here: dividend yield, dividend growth, years. We got the one year growth, 5-year growth, 10-year growth, and the payout ratio. So it factors all of those into it, and punches out kind of a number for each stock. And so I've got, again, one of at least 5. Safety rating, again, it's the same decile, percentile rankings. But for safety, we just look at, EPS growth, whether or not EPS is positive, revenue growth. We've got some various simple balance sheet metrics in there for liquidity and profitability, things like that. But just simple stuff. It's all stuff you could screen for elsewhere. Value, same thing. I put a rating of 5 in there. So value is we look at 5 different metrics for value. It's price to earnings, price to book, price to sales. We do enterprise value to EBITDA, which is like a cash flow multiple. And then we also do shareholder yield, which combines the buyback yield. So how much value are they creating from the buyback? and then it adds dividend yield to that. So that's what shareholder yield is. So those are all of our metrics that we look at for value. And then this is one of the key, probably one of the most key filters if you're filtering truly for option income, is what we have what we call the liquidity ranking. So our liquidity ranking is, again, it's very simple. We're just looking at how active does the stock trade, right? How liquid are the shares themselves, and then how liquid are the option contracts. So how many option contracts do they trade? And we look at basically open interest volume, dollar volume, and we look at dollar volume based on shares traded. So that's kind of our liquidity. And what we found over time is that the best stocks to write options on are the ones that have the best liquidity, right? And it makes sense. And there's over 4,000 optionable stocks, and we wouldn't touch 80% of them just because they're too illiquid. Maybe the share price is too low. Maybe the company is too small. There's just very easy filters to filter all that stuff out. And so liquidity ranking is very key, I think, to making sure that you find a stock that will trade options pretty actively. And then volatility risk, again, pretty simple metrics: standard deviation, maximum drawdown, things like that, where you look at the historical and implied volatility, which is kind of key metrics with options, right? So, basically what we're saying here is that if we're looking for dividend stocks, like we're looking for blue chip stocks, we don't want the super high volatility tech stocks necessarily in here. We're looking for some very blue chip, stable companies that we can write puts on, and we can potentially get some decent returns. The other reason I call it the triple income too is that I've always said that if you compare the triple income with a basket of dividend stocks, just apples to apples, right? You'd probably have a 3 or 4% dividend yield if you're lucky on the dividend stock portfolio, but over time you can get probably triple that with an option portfolio on the same stocks, right? And so you can really triple or 3x your dividend income by just utilizing options around the same stocks you'd want to buy anyway, right? So it makes a ton of sense. So that's the metrics I look at. And so if we look at the actual output here, so you can see from this screen that there's 36. So there's 36 stocks that meet that criteria, and I'll kind of flip through these, and you can kind of see, and I'm gonna post them out here as well. But you can see, they're big blue chip dividend stocks, right? I mean, they're kind of in the 2% to 4% range. Like I said, that's kind of the good range that you would look for option portfolio. So look, I think this is so key to the process, and I can't reiterate it enough. You got to have your screens. You got to have your watch lists. Take the time, and these things don't. I just did that in literally 5 or 10 minutes, right? Once you save a screen like this, you can go back to it over and over and over. So you always will have the ability to find good trades, right? You've done the legwork early on to say, here's the basket of stocks that I want to look at in my portfolio, right? And then you go out there and you find an option that gives you a great risk reward where you're getting a good premium, but you've got a margin of safety before you have to buy the stock. And if you do have to buy the stock, hey, we've got a dividend that's going to kick in. We got a covered call that's going to kick in, and we just go through the process, recycle our cash. And I'm telling you, you could make 10, 12% a year on a pretty conservative basis utilizing this strategy, right? But you got to do it consistently, right? You can't just write 1 or 2 puts a month and expect that it's just going to happen, right? You've got to have a portfolio, just like you do with dividend stocks, right? You have to have a portfolio of 20, 25, 30 positions that you're constantly cycling through the process. And if you've got that many positions on, right, you got to make sure you've got a good watch list in place, right? You got to make sure that you've got stocks that you want to own and that you can put to work. So that's what I wanted to share with you today. I think please comment down below with questions. If you're on YouTube, like this video, because we're going to create more of this stuff. But I think it's so helpful to kind of go through the mindset of how to create a screen, because it's such a critical part of the process, and you definitely don't want to overlook it. And so hopefully it's helpful. Subscribe to us on YouTube if you like it. There's going to be more videos, and actually what we're going to do on Seeking Alpha with this as well, we're gonna pick 10 of these stocks from this screen, and we're gonna write an article on each stock. So we're gonna cover 10 different stocks over the next 10 days, and we'll probably post a YouTube video on it as well. But this is follow us if you like it, and give us a thumbs up. Hopefully this has been helpful. Take care.